Welcome back to another episode of Right Here in Mass. Joining me today is Elliot Bruce, a CFA charter holder and a partner at Mason Capital, where he has been for the past 8 years. Originally from Boston, Elliot is a graduate of both UMass Amherst and Boston College and loves all things dogs, basketball, and numbers. When he isn't working, you can find him spending time with his family. Elliot, welcome to the show.
Thank you very much.
Thanks for being here. I know I gave a brief overview of who you are and what you do, but I'd love if you could just dive in a little bit deeper with our audience and share more about what your career is like at Mason Capital and also how you got into this position.
Sure. So we are an investment advisor. So usually people ask, what do you do? And my first answer is finance. And a lot of times that's as much as people want to know. But there's all different uh, types of careers in finance. And what we do is if somebody has a retirement portfolio or a trust or pension fund or something like that, we take that and our job is to do research and decide what stocks or bonds to own on behalf of our of our clients.
Mm-hmm.
And I got into that. I started following. I've always been interested in numbers, and in college I took a class in economics where we touched on the stock market a little bit, and from there it just grew. Coming out of college, I spoke to a lot of people to try to figure out what specifically I wanted to do in the field. And because I'm interested in the research side, a lot of people said pursue the CFA curriculum, which is this whole other educational program. It's a series of 3 tests, but the curriculum that they have is incredibly educational, and it was really how I got to learn about how to analyze investments, public investments specifically. And from there, I started looking at jobs in the field, and the one that I ended up working out and I've been with since I really started seriously in this field was Mason Capital. So I started there in 2017. I've been there ever since, and it's a small shop. So Al Mason's started it in I think late 80s, early 90s time frame. Greg's been there for probably coming up on 20 years, and I'm the newest partner, even though I've been there for 8 years. I still speak to clients, and they're like, "Oh, I'm just getting to know you." I'm like, "Yeah, well, it's been a bit of, it's been a while for me, uh, but I am the new guy still." So yeah, it's a small office downtown. I spend most of my time doing the research, so that's mostly reading like annual reports and press releases from public companies, and then putting together our own financials and reaching out with any questions that we have to the companies. So that's how I spend the majority of my time.
And what would you say is your favorite part about what you do or the thing that you really enjoy the most?
I always wanted to do something that's not repetitive, and there's a lot of
Mhm.
learning in this job. So, I mean, there are so many thousands of companies. Basically, anything uh, that is listed on an exchange and their stock trades is a potential investment for us. So, every day I'm learning about a new company, whether that's in a different part of the world or a different industry, and it's just been a total education. I mean, 8 years of researching new companies all the time and speaking with people I've never spoken to and learning about their businesses. So I have a really broad view of the world and the economy and all the businesses that are part of it. So I don't know. I love to learn, and that's been the best part of it for me.
Yeah, absolutely. So I want to dive deeper into this research component. So you mentioned that you spend a lot of time researching businesses and kind of diving into their annual reports and their press releases and things like that. But could you talk a little bit more about what you do with that information and also who it's benefiting that you're sharing it with, if that makes sense?
Yeah, exactly. So there's a lot of different philosophies or angles that you could take when you're making investment decisions. So for us, we like to take a very long-term view. And that means that we're looking for companies that tend to think in their decision making in terms of how it's going to affect the company 5, 10, 20 years down the road. So that's one thing that we're always conscious of when we're reading through reports or reading presentations or listening to conference calls is how are they framing things? Are they talking about well, this month and next quarter, that's not really the type of thinking that we want. We want somebody to be talking about the structure of the business and how they're setting up, say, like their general managers in a position to be with the company for a long time and grow their portion of the business. Like that's the type of
Mhm.
thinking that we look for. So that's one kind of thing. We look at, again, long time frame. We like to look at a long history of a company. So we'll look back 10, 20 years and see how the business has changed over time. And generally, we expect that if something has a pretty consistent track record of going up at the same rate, you can, unless there's something totally different about the company now versus 20 years ago, you can probably assume that it's going to continue in that way. So, I mean, those are a couple examples, but we like to frame everything in that very long-term oriented view, and we try to find companies that align in the way that they're thinking about managing the company. Because really, we're not doing anything except for saying yes, this aligns with how we want to see a company managing their business, and as long as they do that, then we're at least interested in following along. And so we're very slow to invest too. So our portfolio is like 100, 120 companies, but that's been built up over the whole time that Al's been running the business. He's always had the same philosophy and strategy that we've stuck to. And so that's the accumulation of like 30 plus years of work. And
Mhm.
we're very slow to add a company to the portfolio, but also slow to remove a company from the portfolio. So that means we might only buy like 5 companies, maybe 10 max in a year. And it's not because we're trying to hit a certain number, but it's like we could do all this research and speak to a company and it all sounds great, but we still are not completely familiar with the business and we like to follow along. And I feel like sometimes we surprise them by saying, let's speak again in a year and see how things have changed. That's the
Yeah.
kind of time frame that we'd have as a minimum to say, now we can see what's happened year to year. You said you were going to try to do this. This is what you did. Following through and all that kind of stuff is really important for us. So
Yeah, that's interesting. So a few questions that I have based on what you shared. One, I'll share both questions first, and we can you can run
okay,
through and share your answers. But one, how do you come across these companies that you're kind of researching and doing your due diligence? Like, how do they stand out to you? What methods do you typically use for finding them in the first place? And then two, I mean, you mentioned that there's 100 plus companies in your portfolio, and you're obviously doing a lot of research on many companies and having all this detailed information. How do you actually keep track of it all? Like, I feel like that's impressive to have all this information that you're storing and then referring back to a year later once you end up reconnecting with the company or whatever it might be.
yeah. Um, the one thing that we would love to have more of is time.
Hmm.
Um, I'd say there's no issue finding new potential investments.
Yeah.
There's thousands and thousands of companies that are listed publicly around the world, and we've probably only met with a fraction of them because a lot of them will come into being. An IPO, we can't possibly even keep track of day to day how many IPOs there are, let alone year to year. And then companies merge, they come out of bankruptcy, they go private, they come back. I mean, there's companies everywhere,
Yeah.
and it's not difficult to find potentials. It's it's about doing that first look, and if it's something interesting, then pursuing it further. Um, I'd say when I started, a lot of the potential ideas that were being referred to us was through brokers or IR firms that would say, "Hey, we've got a relationship with this company. Why don't you check them out?" And that's still how we get a fair amount of our, um, I wouldn't say ideas, but our suggestions to look at
Hmm.
a company. But there's just one thing leads to another. You read an annual report, for example, of a company, and most of them list competitors, right? So you could say, "Oh, I really like this business, but I don't know if I like the way that this company manages the business." You could still have like anywhere from 3 to 10 other companies in that same business to then go forward and do a little bit more research into. And then you read the paper, or somebody mentions, "Oh, I just bought this in my portfolio. What do you think?" And that it's like a domino effect. One company leads to the next, one article leads to another idea. Like it's just there's so much in terms of potential ideas. So that's never been an issue. It's mostly an issue about knowing when to not pursue something,
Yeah.
which is the issue with time. So then you said, how do you keep track of all these investments? Because these are companies that we've spent a long time getting familiar with. By the time that we're investing in them, we already have a pretty good baseline, and it's mostly just about checking in. Um, so we'll review their quarterly press releases, or sometimes they'll make an acquisition during a quarter, or have some other sort of business change that would, they put out a press release that's not just on a quarterly basis, and we're always following that. That was a big part of one of my first tasks when I was here, was organizing that to make sure that we were on top of all the data flow, because that's a lot. It's a lot to keep track of. You
Yeah.
say you have 100 companies and they're at a minimum releasing 4 quarters a year plus an extra press release here or there. That's like, could be 5, 6, 1,000 press releases overall in a year, and that's just keeping up to date. And then we speak to quite a few of them each year too, just to check in and say, a lot of the people there we're familiar with at this point, so I could send an email and say, hey, do you have 30 minutes to just catch us up to date on something that we saw in your quarter that we're not quite sure about. So, but like I said, that's our main business. That's our main job, is to be keeping track of these companies and find new ones. So
And
yeah,
this is
there's
to go
no
on behalf of your
yeah, go ahead.
clients, right?
Yes, yeah, exactly.
Yeah. Yeah, it's so interesting. Just to think about it. You mentioned how you'll refer back to something you heard from a potential company and then like refer back to it a year later, and just kind of being able to hold them accountable, honestly. It sounds like is what you're doing, is just making sure they're kind of following through on what they said that they were going to do to make sure it's a good investment on your end.
Yeah, exactly. Because we're not making those decisions at the company level. We're just saying, yeah, we trust you guys to make our decision. That's part of too why we speak to them, is
Hmm.
you have a face-to-face conversation, and you get a better idea of what their goals and strategies are than just reading some text. So
Exactly. And could you talk a little bit more about the types of clients that you work with? So you have all of these companies that you're researching and in close communication with, like who is it ultimately benefiting? Who are these investments and all of the work that you're doing, like I guess basically going for?
yeah, most of our investors have, or most of our clients have just been people who we've met over time. It's like always been a word of mouth type of business. um, so friends and family first, and then you bump into somebody and you say, hey, I've got this investing business. We're an investment manager, and they say, oh, I've got a retirement account. I just left my job. I need somebody to kind of look over it and make sure that it's invested correctly, and it goes from
Hmm.
there. So that's another distinction between us and others in the business, is there are plenty of companies in the investment management business, and some of them uh, will spend a lot of time on marketing and trying to bring in new clients. We tend to not have done that historically. This is the first podcast or interview that I've done, and I think it's because we'd like to get out there a little bit more and say, hey, we're here, because
Yeah.
we're just in kind of a nondescript office in downtown Boston that nobody would just walk past and say, hey, I should stop in there someday. Um, so it's mostly been word of mouth, and we kind of randomly have a lot of um, dental field professionals. So that was one thing that just by chance Al spoke at a conference years ago, and then was asked to come back, and each year he'd go and speak and explain the business and leave with a new client. And just kind of word of mouth in that field. I guess dentists go to conferences and say, hey, who's managing your money? How are they doing? And it's just communicated that way. So
Yeah,
it's
that's
just grown
interesting.
organically in that way.
Yeah, and that's interesting to hear. And it kind of sounds like from what you shared too, that you value retaining the clients that you have almost more than seeking new ones.
Yeah,
That's kind of a mindset that I have too, is like it's so much more important to retain the people that you currently have, because then if you get new clients, you still have to worry about retaining them too, or else it's kind of like that revolving cycle. So it's nice to hear that you've worked with, since the company has started, since Al started it in the 80s, being able to kind of work with those same people ever since.
yeah, yeah. There are quite a few clients that have been around for 20, 30 years with us, and like you said, that's a very important part for us. I mean, again, long-term thinking. We encourage anybody who's looking at us or any other financial advisor or investment manager to see if your philosophies and your strategies and interests align.
Hmm.
Like I said, we're very long-term oriented. If you're thinking about trying to hit a big home run by investing, um, we're very comfortable saying this is not the strategy for you. There are
Right.
plenty of potential investment strategies out there, plenty of people who are going to take big risks in order to try to have some kind of outsized return. But that's not really what we do. What we do is very much about conserving your capital and growing it over time in a way that takes a lot of risk off the table.
Hmm.
And if that's something that you're interested in, let's talk about it. We can tell you more about the type of research that we're doing and why we believe that it has worked how it has. So, we're not just trying to pitch to everybody that we meet. We want to make sure that it's something that aligns with them, and I think that's why it's grown that way over time, and why a lot of the clients that we do have stuck with us for a long time.
Absolutely. And knowing that your mindset and approach is really focusing kind of on the long game and the longevity, do any of your clients come to you with concerns or looking for strategies with anything, knowing that it's an election year, since that typically tends to change things? Or is that not even something they're thinking about because of the fact that they know they're in it for the long game and they're focusing on those long-term strategies?
We very rarely will get short-term oriented calls.
Mm.
We'll get some every now and then. If there's a big move in the market, we might get a call that just says, "Hey, like, what do you think?" And usually we can say generally why we think something's going on and what we think the reaction will be. But because we're doing our research and investing specific to companies and not trying to like game the system or make any investments that are centered around like interest rate moves or macroeconomic stuff, like we're really just trying to make sure that the companies that we're investing in are strong companies, because those are the type of
Mhm.
businesses that are going to weather any downturns. So even if there's a short-term pullback, that's part of the whole communication for us with our clients is these companies that we're investing in them through the ups and downs, because we know that when things go south, they have a plan in place. They have built their business structured in a way that they're not going to be long-term affected usually by any kind of short-term changes. So I think I like to think we've done a pretty good job communicating that, and that the history of the investments shows that these are the type of businesses that are able to keep going through tough times. Um, but yeah, we don't get a ton of concern in that way.
Yeah, that's great. And like you said, you've done a good job, obviously, communicating it to your clients of really what your approach is and what your mindset is with that. One thing that I'm thinking about too is how like emerging industries or anything like that might come into play with your research of looking at new companies for your clients. Like, for example, life sciences has been huge in Boston for the past few years, and AI obviously is something that's been really big over the past few years. So, is that something that you kind of keep in the back of your mind as you're looking for new companies to invest in, or do you really kind of focus on those companies that have been around for a while who've kind of established those roots?
Yeah, we look at everything, so we're always considering. I mean, even excuse me, even cryptocurrencies. Like we spent a pretty good amount of time looking at
Mhm.
it, but for us, something like crypto or AI companies or cutting edge life sciences, it's not something that we have. First of all, it's not something that there's a huge track record on yet. And so
Right.
we don't know when a business cycle reverses what's going to happen. And that's really important because we want to know that in the worst case scenario, that it's not really that bad. Um, life sciences, for example, a lot of the earlier stage companies, they could just have bad clinical results, and that would be it for the business or
Hmm.
something like that. We're not experts in the field of drug development, for example. We know a decent amount about the structure of it because I've probably spoken to well over 100 different biopharma companies, but I wouldn't be able to say this drug's going to work out and this drug's not. So we're not going to speculate in that way. Um, AI companies, for example, or other early stage businesses, a lot of them aren't making money yet. And so it's another speculative position where you're like, this company's going to turn a corner. Well, but if it doesn't, you're in a lot of trouble.
Mhm.
So we're not trying to put our investments in a position where we really are relying on some significant change. We want to be investing at a point where there's already the structure in place that we know it's stable, and we're not going to have to rely on something changing.
Yes, makes sense.
Yeah.
And then with that, through all the companies that you've spoken with and looked into, have you found an industry that you've become interested in, that you maybe never would have been exposed to if you weren't doing the work that you're doing, or just anything that you find is really new and exciting lately?
Um, I don't know about lately. I feel like I'm really interested in every industry. Um, One that we don't have a ton of investments in because it's a tough business, but that I always find the conversations are really interesting are shipping companies like ships, actual ships, shipping companies, because those are such massive investments. I mean, you buy a ship and it could cost 50 to 500 million dollars for something that's just going to transport goods all over the world.
Yeah.
Those are huge investments. So I'm always really interested in those conversations. There's a handful of investments that we have in that space, but I don't know. I always find those to be pretty neat. And then I'm also always interested in the conversations that we have with real estate companies, um, because real estate's not real estate. There's something specific to each little niche, whether that's like a part of the world or like the quality of the buildings or the tenants that they have. There's so much granular data that you can talk to these companies about. That there's every real estate company is totally different. And I think from an outside perspective, when I was first coming in, I'm like, real estate's real estate. You get a tenant, they pay your rent, and you're fine. But you really have to worry about like the quality of the tenant, the quality of the building, the upkeep, and the
Yeah.
markets that there's just like a lot to it. So I'm always interested in those kind of companies where there's just like a lot of variables, and it's like, how do you handle all these different variables? Because sometimes you speak to a management team and they've got an answer for everything and it makes total sense, and they've been doing it for a long time, and that's that's where we're like, all right, this clicks, this works.
Mhm.
But sometimes you ask those questions where there's a lot of angles to it, and something pops up as a red flag, like, oh, they're not accounting for this little risk here. I don't know. I like learning about everything, so it's all fun. Those are a couple that always catch my interest.
Yeah, I like that. And for anyone who's listening who is thinking about starting to invest their money or has an account or anything that's just kind of sitting, I mean, what advice would you have to give to them with just really being able to get started?
Yeah, I always encourage people to do their own research if they're interested,
Hmm.
um, because I've always been interested in doing the research. So like, I would never have been a potential client for us. I don't know if that makes any sense, right?
Yeah.
Like, I would always manage my own money, and I encourage anybody who's interested, manage your own money. It's really not that hard. It just takes due diligence and time, and making sure that you're keeping on top of everything that you're buying. But I think that there's a lot of data out there. So I always encourage people, go read an annual report, find a company that you're interested in. I don't know. One that comes to mind that I've read recently is like the Comcast, right? Comcast puts out an annual report. go read their annual report from page 1 to the last page. And if you find that you are really interested in that, then you, first of all, know a lot more about the company, because there's always something in there that you would never have expected. And secondly, you're going to get more knowledge about like how to frame this company when they're talking about some sort of results. Companies put out their quarterly results and they say, oh, our revenues beat by 1% and our profits beat by 0.5%.
Mhm.
It's like, okay, that's fine, but like, where is that coming from? What parts of the business are being really, hurt by whatever economic changes there are, or what are the parts that are doing really well right now? That's all contained in an annual report or a quarterly report. So I don't know, anybody, especially people who are interested in getting to the business, I say, well, before you like apply to jobs here, before you pursue the CFA charter, read an annual report. If it bores you to tears, do something else. If you find it really interesting, then this is probably something that you should look into further. But even if somebody doesn't want to do that, there's plenty of like summaries, and there's a lot of like crowdsourced research that I think is pretty decent out there.
Yeah.
What kills me is just somebody who buys a stock and they don't even know like the name of the company or the business. Like I think at a baseline, you at least need to know what they do and how they do relative to their peers or something. That's just like a total baseline. And from there, you can. It's all about making your own decisions in this field. There's very rarely. I don't want to say there's very rarely black and white decisions in this field. Everything is a sort of a gray area, and it's about piecing together information and then putting it into the structure of like how you're thinking about what you're looking for in an investment.
Mhm.
So you got to have a strategy first of all. Maybe you do want to take those risks. Maybe you're very interested in life sciences, and you have a good idea of like what kind of cancer treatments are going to be successful, right? If that's your expertise and you're really interested in it, and you want to take a little bit of your investing and put it into these early stage companies, like I think that's great. It's not for us. Our strategy is more long term oriented, more about stability, and we're not life science experts, so it doesn't work for us. But like everybody has
Right.
their own fields that they know about or that they're interested in. So first of all, read an annual report, and second of all, try to look into something that you're interested in. Like if you're not interested in banks, don't buy banks, because if a bank that you invest in does poorly, you're just going to be really annoyed about it, and then you're never going to sell it because it's down. There's like all these little pitfalls of how to like not invest. So
Yeah.
I don't really know how to stop on this tangent, but
Well,
I
you're
don't know.
obviously very passionate about
Well, there's
it.
a lot to it, I think.
Yeah.
So yeah,
Yeah.
I don't know.
No,
But
that's great
basically,
advice.
I encourage people to do their own research. Investing is not that hard. It's just about like being consistent with your decision making, and
Mhm.
that's like the main point. And having some kind of framework that you're putting it all into.
I think that's smart. The whole notion of doing your own research, doing your own due diligence, and kind of being able to paint the picture yourself from there. Because I mean, obviously, I'm not an expert in any way in investing, but I've read books on it, and I feel like I read the book, and I'm like, I don't know. I feel like that's kind of what's the word? I guess like I would have known that. Like, you know what I mean? Just kind of like basic information. It's like I could have assumed that information. And so I like the idea of just kind of diving in, taking all the data that's given to you and just being able to make informed decisions from there and with being able to do your investing.
I also kind of push back against the idea that there's some kind of like expertise that you need. A
Yeah.
lot of it's just business, and these are just companies
Hmm.
that run like regular businesses that have just done very well. I just mentioned Comcast, like they are a cable company first and foremost, and then they run theme parks. Like these are all businesses that are fairly understandable,
Hmm.
um, and like it's just a matter of reading through and being like, oh yeah, that makes sense. Their theme park admissions were up this year because people are less freaked out by COVID, like something like that.
Yeah.
Um, there's a lot of common sense that that goes into it. And anytime that anytime that investing is intentionally overcomplicated, I I really push back on that because it really doesn't have to be that complicated. It's just about having a game plan and sticking to it.
Yeah, that's a great advice. And since we've talked about advice you'd give to people for investing, I mean, I think you kind of like briefly touched upon it, but for anyone who's listening who's looking to get into the field as for this as a career, what advice would you give to them for that?
Yeah, so the first thing is reading an annual report. And if it
Yeah.
bores you, do something else because even if you want to be in finance, there's tons of other finance jobs. But if you very specifically want to be in research, which I can speak to because that's what I do, you have to enjoy reading those because that's a big part of it. You have to enjoy financial statements and like going through the balance sheet, which is like, assets and liabilities and equity of a business, their inventories and their cash and their debt structure and all that, as well as like their operating expenses and their cash flows. Like that all has to be really engaging to you.
Hmm.
Um, that's a prerequisite to pursuing this field. So if you read through an annual report and you're like, wow, this is so interesting. I love learning about like the interest rates that they have on their bonds, which is like legitimately interesting to me. Then the next thing you should do is pursue a CFA charter, in my opinion, because that was an incredible education. They print like really thick textbooks. I think that's I, I don't know, I can't remember exactly, but I mean they're like several hundred-page textbooks, and they go into everything from basic accounting to basic economics, basic stats. There's tons and tons of information there, and it'll give you a really good foundation for getting into the business. And also, it's a really well respected program. So if you're looking to um, get an internship or an entry level position, and you walk in and say, "Hey, like I've I've read some annual reports. I've started pursuing the CFA. I've passed the level one, for example." That's going to lead to a much different conversation than if you walk in and say, I like stocks,
Hmm.
because there's not anywhere to really go from that. Like everybody likes to make money on stocks, right?
Yeah.
Um, so I think that's a very important point when you're going in and trying to say like, hey, look, I've committed to pursuing this because I'm interested in it, and then you can have a different vantage point. I mean, I actually tried to pursue the business, I think probably before I was really ready or qualified for it. But because I was pursuing the CFA, it just finally allowed me to get my foot in the door. But before I was pursuing that, it was a lot of those conversations like, you really should show that you're interested by doing this. So
Yeah.
yeah.
I love that. Elliot, as we get closer to the end of this episode, one of my favorite questions to ask our guests is what their favorite local businesses are to support. So, what would you say your favorite places are to support, shop at, frequent, all of that good stuff?
Um, well, one that jumps to mind is because I live in Maynard. There's this really good Korean place in downtown
Ooh.
Maynard. Actually, I should know the name of it. Little Busan, super good. I love you know all different cuisines, and I like to pop in there every now and then, get a little kimchi and some like bulgogi or something.
Yum.
Love that place, super good. Also, not really a place to stop in, but my wife runs a sole proprietorship sort of thing called Dot and Ellie Companion Services. So she works with seniors who would like to remain in the home, don't quite need healthcare support yet, but need somebody who's going to help with daily chores or something like that. And she's been doing that for about 4 years, I'd say. And so just shout out to her. She's doing great, and she works with I think probably 5 or 6 people right now, and is probably flat out in terms of like workload. But I don't know, just a good job to her. She's doing great. And then also another family related small business. Her her cousins and uncle and like grandparents managed a place called Joyce Funeral Home in Waltham, and so that's like a very important part of the family. And I've seen the way that they interact with families who are going through um, the hardest time in their life because they've lost a loved one, and I've been to funerals before, but I've never seen that level of care and love that they show. So, if you are in a situation where you're, first of all, I guess local to Waltham, but second of all, going through that hard time, I know that they would be a really uplifting and helpful place to go. So I don't know. Those are just like maybe totally different than what you're used to. Because I mean, I could name restaurants forever because I just love restaurants. But some small businesses that are close to my heart. And also, if you're selling a house, my one of my best friends, Nick Gomez, works for Insight Realty in the Shapey, West Roxbury area. So he's awesome.
Perfect. I love all the family and friend connections.
Yeah, I mean, it's important to me.
Yeah, I love that. Elliot, thank you so much for coming on today's show. I would love to give you an opportunity to share with our listeners where they can find you as well as Mason Capital Partners online in case they'd like to connect further.
Sure. We're actually in the process of designing a new website, um, which will be really great because the one that we have now is pretty basic, but the URL is mason-capital.com. You could shoot me an email at ebruce, EBRUCE, at mason-capital.com if you have any questions, whether it's about um, what we do or whether it's just generally about investing and you've got any questions. I'm always happy to discuss. Um, and then we also launched our own ETF this year, which is more accessible for people who are just getting started or want to maybe have our strategy as a small piece of their portfolio. So that one, the ticker is KNOW. It's because we think you should know what you're investing in, and we are. I know it's very cheesy, but we're in the process of in the process. I'm trying to do more videos about what we invest in and why. So far, I've done anytime we've added something to the portfolio, I've made a little video like, "Hey, we added this, and here's why."
Yep.
And that website is fundamentalsfirstfund.com because the name of the ETF is the Fundamentals First ETF, ticker's KNOW. So those are the two places you could find us, and yeah, that is it. Thanks for asking.
Yeah, awesome. I will link to all those places in the show notes. That way our listeners can click through and connect with you from there. But thank you so much again for coming on today's show.
Great, thanks. Also, you can find us on LinkedIn and Facebook and all that stuff.